Hi, I'm Brien Lundin, and I'm here at the Gold Newsletter YouTube channel. We're talking today with Gwen Preston of West Red Lake Gold Mines. Before we get started, please subscribe and like to the channel where we can bring you lots of great interviews with wonderful companies. And Gwen, wow. Gwen was the best, or I should say second best gold newsletter writer in the industry. I would actually say the best, and you've moved over, transitioned to working for West Red Lake Gold Mines.
That's right.
That might be your first job, to shorten the name of the company.
We are absolutely in conversation about shortening the name of the company.
Well, let's start off from a good foundation. Tell us the share structure and everything else and where we are in market cap, so people can put that in perspective.
Yeah. So we have about 264 million shares out, 350 million if it's fully diluted. So there's a good chunk of warrants out there. Market cap's about 170 million, which I would say is pretty cheap for a company that's going to be producing gold in just over a year.
And producing gold, the story here is one of production, and this is kind of Frank Giustra, who is one of the most accomplished financiers in the mining industry. This is kind of his gold production play, right? Tell us how that works into that business model.
Yeah, that's exactly what it is. So Frank is really good at timing, right?
Yeah.
He's
noticed. Yeah.
One of the reasons he's been successful for a couple reasons, but one of them is timing. And he has a knack for identifying the beginning of a new gold bull market. And a couple years ago, after being out of mining for many years, he got back into gold about 2 years ago and decided that he wanted to re-engage. And West Red Lake, when the opportunity was presented to him to buy this Madsen mine, we can get into the backstory of the Madsen mine, he jumped at it because he realized that the Madsen mine, which went bankrupt after a short period of operations, but was a brand new built operation with fixable mistakes in place, he realized that was like the perfect foundational asset to build his next big gold mining company. And that's really the vision here, to put the Madsen mine back into production as the first asset, and then to pursue a pretty aggressive growth strategy to develop a new mid-tier gold mining company, because that's what he wants to do if there's a gold bull market.
Now, all of that infrastructure was in place, right? And so he got that, or the company got that project at, I would assume, would be a fairly good price?
Yeah. So
that helps the economics, doesn't it, when you don't have the capex?
Yeah. So Pure Gold, which was the previous company that owned this. So the Madsen mine was first in operation from like the 30s to the 70s, 2 million ounces pulled out of the ground at like 9 grams per ton. This is Red Lake. This is high-grade gold. Then it went dormant for quite a while because gold was not worth enough. And then fast forward to 2015, that's when Pure Gold bought the asset. And they really got excited about the opportunity to get the market excited about the next great Canadian gold mine. And their plan really was to drum up that excitement and then sell this opportunity on to somebody to build and then operate a mine at Madsen. They kind of did too good a job. They got the market too excited, and the value of the company went past $1 billion, which is, in just about any estimation, too high for the scale of the asset. So then the offers that were on the table fell away, and then Pure Gold did have to build and operate the mine. And the problem is that Pure Gold's management had never built a mine before.
Yeah.
And so there were just some mistakes along the way that they made. The result of those mistakes is that the ore coming to the mill was like 3.5 grams per ton instead of the expectation of 8 grams per ton. So that's not going to work. And then the costs were much higher than expected because they pushed a bunch of, instead of spending money on capital, like buying things, they leased a bunch of stuff and put all that cost into operating. So their costs were really high and their grade was really low. And that's not going to work. And then COVID sort of layered on top and the whole thing fell apart. But the mill that they built is a beautiful piece of machinery that worked really well, and we have that. And that was built just 4 years ago. And a lot of the underground development that they did, obviously really useful. So, and the tailings facility is new and built. Everything's permitted. There's a huge amount of infrastructure there. Pure Gold spent $350 million on this project, and we bought it for $30 million, and only $6.5 million of that was cash. So yeah, we pennies on the dollar is one way that people like to describe it.
That will certainly help the economics. But in addition to their inexperience in actually running a mine, weren't there some challenges with the ore body as well?
So yeah, one of the outcomes of the inexperience was that they stopped drilling too soon. Once they started building the mine, they really stopped drilling. This is Red Lake. This is nuggety gold, and you need to drill on like 6-meter centers. You need to do a lot of drilling to know where gold is in these systems. And the best description I have is, they had a model that was this, and they thought they could just mine this whole strip and it would be continuous. But that's not it. That strip is the mineralized envelope, and the gold exists within that strip, but it exists in pods within that strip. If you mine the whole strip, you're going to take a whole bunch of unmineralized material, which is why it gets diluted down by more than half. So what you need to do is infill drilling to identify where the pods are. You just really got to know where the gold is. And then you can mine much more selectively and deliver material to your mill that's the right grade. So we've been drilling with 2 drills nonstop since October, and we will continue drilling with 2 drills as long as this mine is operating, because the most important thing is knowing where the gold is. Yeah,
and that's my recollection as well, that they didn't have the ore body defined to as granular as they needed to be.
Exactly.
The other thing, and while the grade in the ore is great currently, but there's more deeper, isn't there? I mean, like the 8 zone, is it the 8 zone? That's kind of the jewel box they could not get to in time?
Absolutely. So they definitely talked about the 8 zone, because the 8 zone is a great expansion possibility for a mine like this. The 8 zone, so the resource that we currently have is like 1.7 million ounces at 7.4 grams. That's the indicated resource that we're infill drilling to turn into reserve, which is great. The 8 zone, which sits right at the bottom of the shaft that the old timers built down to almost 1,300 meters, is 200,000 ounces at 18 grams.
Right.
It is a thing of beauty. And, we have the zone defined a certain amount. And then we have expansion hits, that are that far again down dip. Like, there's a lot of opportunity to grow that jewel box, if you want to call it that. But you got to get down into the mine. You can't drill something that's 1,300 meters below ground from surface. You have to be in the mine, operating, making money, and then you have the opportunity to really test all of that gorgeous potential at depth. So that's the reason to put this mine back into operation, is to make money, but also because once you're down there, then you can test for the expansion at depth. These Red Lake ore bodies, they go deep and they get better at depth. So once we're operating, then we can really attack that potential at depth. And who knows, maybe this thing can be significantly bigger than the scale that we start out at.
Yeah, so let the mine pay your way down to that higher grade.
Exactly,
ore. And so this is a great story when you look at the fact that the CapEx is already expended. That really supercharges the economics. That's a wonderful thing. But I take it that this is perceived as the first step in a multi-step big picture plan that Frank has?
Absolutely, yeah. Frank doesn't do small, right? He doesn't do much exploration. That's too small. He doesn't even really do single asset operators. I mean, he built Endeavour Mining, right? The largest gold mining company in West Africa. Same game plan. Start with a single asset and build with fairly aggressive growth. If you look at his track record, and in conversation with him, I mean, he doesn't try to get the best deal, or what he pursues is growth at the right time. Because if the gold market is going, you need to grow into that market, and that's what's going to give your shareholders like a supercharged return, is growth in a rising market. And he really believes, we all really believe in that rising gold market. So our pursuit is of aggressive growth. So we're looking at operating mines. There's an M&A team that's busy looking at all of those opportunities. We'll see where they go. There's nothing until there's a deal on the table, but that's absolutely part of the focus.
Yeah, and I would assume that given Frank's ability to write checks and get a good deal, that it would be accretive, whatever new acquisition.
For sure. And it's his ability to write checks, but also just his access, like cost of capital is the most important thing in our business, right? And when you have someone like Frank in your wheelhouse, he just opens doors. He has ideas and opens doors and brings down your cost of capital, which is really, really important. So yeah, we're able to and opens doors to deals that maybe wouldn't let someone like a small company like West Red Lake in the door. But when West Red Lake comes with Frank Justra, then they're like, oh, okay, let's see what you do offer. And so we're able to pursue aggressive growth because of Frank in a way that a small company probably couldn't usually.
Now, that's an exciting big picture, because I'm also a big believer that we're in a secular bull market for the metals. Obviously, Frank agrees with that. Let's go back to the assets you do have. What can investors look at? Let's kind of review what assets you have right now and what catalysts are coming up for these assets.
For sure. So the Madsen mine, mostly ready to go. Mill already built, tailings already in place, water process plant in place, a lot of the underground development already done. What we're doing right now is that continuous infill drill program to make sure that we just keep building like stope-defined mineable inventory, right, for the first few years of operation. Yep. So lots of infill drilling. As part of that infill drilling, we're also expanding zones, right? This mine has been tapped, once in the 30s to the 70s, and then Pure Gold, went in there again. And there was another company called Claude that did some mining in just the upper levels of the mine before Pure Gold. So there's parts of the mine that have been mined a couple times. Where there's bigger opportunity is in sort of some parallel structures. We have these north and south Austin structures, which the main one's called Austin, where there's sort of unmined, chunkier opportunities, which is great for mining economics. And then once you get deeper, that's where most operators didn't get to with any volume. So we got to get down there. There's a lot of opportunity to define new mineralization by looking in these places that other people just didn't really get the chance to get to. And then, drilling the 8 zone. So lots of drilling to show what we have, to make sure we have confidence in it, and to grow, the near-term mining areas. But in terms of catalysts, I mean, this year, the next 8 months is all about being ready to turn it on. So we're driving a 1.2 kilometer connection drift so that the east and west portals are connected, because that's how you have an efficient mine. We're installing a camp because the previous company didn't have a camp, so they had very high costs for housing their workers, trying to rent homes and hotels in the town of Red Lake. We're bringing a primary crusher. They had leased a primary crusher at a fairly high cost. That was one of those things that made their operating costs high. So we're installing a permanent primary crusher on site. There's lots of projects like that are critical path items to setting up a mine that is likely to give us, good costs and sustainable production, which is the whole goal, right? That's what we need. So there's a bunch of those projects that are going to be completed over the next 6 months. By the time we get to the end of the year, we're going to issue a pre-feasibility study. This is a bit of a sideways path, right? Because we're doing all the work, and the pre-feasibility study is going to come out when the work is almost done. So that pre-feasibility study will have a very tiny capex on it because the work is happening ahead. But that's just the way these things work. It takes that long to get an official pre-feasibility study. And then by the middle of next year is when we're gunning to be ready to turn this thing on again. So that, call it the golden runway, the second half of the Lassonde curve, whatever you want to call it, that re-rate that goes from spending money to build a mine to making money by operating a mine, that's the re-rate that we're looking for as shareholders in West Red Lake over the next year.
So with that drilling, is there a chance you're going to have an increase in the resource or just a higher confidence? Which is important as well.
Yeah, so we will redo the resource estimate as part of the pre-feasibility study. I don't think the resource is going to grow a lot because we've been focused, it will grow a bit, but it's not going to grow a lot. We've been focused mostly on the infill drilling so that we have confidence and defining a reserve. Because currently there isn't a reserve on the project because the feasibility study that Pure Gold did is not something that we rely on at all. So no, the resource isn't going to grow substantially. It'll grow a bit, but not significantly. Mostly what's increasing is the confidence.
So that pre-feasibility study will tighten up the numbers, I would think, with all that CapEx, a tiny CapEx. Those could be some really interesting numbers.
Yeah, I mean, we're keen to
How much are you spending now in pre-production?
So over the last year, we've raised $100 million. We have about 40 million of that in the bank right now. We will need to raise a bit more money to have enough to be comfortably financed to, through to consistent production. So say we will put about $130 million into this asset to remedy the issues and get ourselves into full cash flow. But yes, the pre-feasibility CapEx number, I don't know what it is, but it's going to be very small.
Right.
But we're excited to get that pre-feasibility out because we can't talk about how many ounces per year we're going to produce or what the cost of those ounces is going to be because we don't have an official study. People can look back at the old feasibility study from Pure Gold and get a sense of cost and scale, but we can't talk about those until we have the study out. So we're gunning for that study so that we can loud and proud talk about this mine that we're starting up.
Yeah, I think that would make an interesting slide in the deck showing the economics at that point. So that would be, I would believe, a big catalyst for the company because you don't have any preceding PEAs or earlier steps that you've been able to show the market. So it's going to be...
It's going to be kind of a go time moment.
Yeah,
and as someone who is out, my job is to tell the story, right? Is to
You're doing well too, by the way.
Thank you. My job is to tell the story, and I want that pre-feasibility study out so that I can just speak to the numbers.
Right.
We internally know what those numbers are, but it's just a process to get that official study out. And so we are confident in what we're doing and why we're doing it and that the numbers make sense. But until that study's out, I can't name those numbers. But what matters is that we're confident and we're doing all the work this year because we know that this mine is going to do well. And so we're getting those jobs done so that we can turn this thing on as soon as possible because look at this gold environment.
Right.
Who doesn't want to produce gold when gold is worth $23.50?
Wonderful timing. Well, it sounds like an exciting story. You're conveying that excitement very well, Gwen. So glad to be with you. West Red Lake Gold Mines, symbol?
WRLG.
And website?
WestRedLakeGoldMines.com.
Well, that's easy.
Yeah.
Gwen, thank you so much for joining us.
Thank you for having me, Brien. Lovely to see you.